Hello everyone. Today we're going to have a brief market overview, then talk about today's UK retail sales figure and the ECB meeting. This is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing my European opening market comment. Currencies have generally stayed in a narrow range ahead of today's ECB meeting. The dollar's trade-weighted index was up just 0.2%, while the euro's was down about the same amount. Not much of note. The biggest mover was the Canadian dollar, which fell following the Bank of Canada meeting. Governor Polo said the Governing Council actively discussed the possibility of adding more monetary stimulus, although they decided not to do so. The Australian dollar fell after Australia reported a fall in employment in September, rather than the rise that the market expected. Oil rose on an unusually large fall in U.S. oil inventories. That's the yellow bar in this graph. Normally, oil inventories are rising this time of year, as the gray bars show. And gold rose during the final U.S. presidential debate after Trump said he refused to say whether he'd accept the election results if he loses. The gold price is falling back now, however. Now, once again, the European day starts off with a UK economic indicator, retail sales for September. Sales are expected to be up on a month-on-month basis, but for the year-of-year rate of increase to slow. Nonetheless, it still shows fairly healthy growth, so I'd expect that a figure in line with expectations could be positive for the pound. Next comes the main focus of the day, the ECB Governing Council meeting. There's no question of a change in rates. Growth has held up reasonably well since the September meeting, and inflation has actually ticked a bit higher. At their last meeting on the 8th of September, the euro rose going into the meeting, but after the Council confirmed its easing bias, the currency weakened. To end the day, little changed. With no substantial changes in policy likely at this meeting either, I'd expect a similar result. Increased volatility around the time of the meeting, but little movement overall. The focus will be on 2 points. First, there could be a report by the committee investigating ways to keep the ECB's bond purchase program going smoothly. They're said to be considering easing the restriction on buying bonds that yield less than the ECB's deposit facility rate, which is minus 0.4%. Secondly, the market will be looking for clarification of recent talk that the ECB might start tapering off their bond purchases before they end their quantitative easing in March next year. The risk is that if they do get a report about easing the restrictions on what bonds they can buy, the market might infer that the ECB intends to extend the QE program past the March end date. That would be negative for the euro. On the other hand, no report and no comment about tapering could be construed as tacit assent to the reports about tapering, which might be positive for the euro. Personally, I doubt whether we'll hear anything concrete about either. I think they will extend their QE program, and they will probably need to adjust the requirements for bonds in order to do so. But I think it'll happen at the December meeting, when the Council will have a new set of forecasts on which they could base a change in policy. For an update on the U.S. indicators coming out today, please watch my North American opening market comment. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.